Don't ask me what the price of gold will be in the future, but if our technical analyst is right on the US dollar index, the DXY, we have the DXY in 2027, 2028 at 50, which is effectively half today's level. And if that is the case, you will probably see a doubling in the gold price. The rise of gold and decline of the dollar in 2025 show that we are entering a new era where supply chains and trade finance must be able to adapt and be strong. The investment bank produced a huge report this week that showed how gold might reach about $5,000 per ounce. They said that if 1% of the privately owned US Treasury market were to migrate into gold, the price of gold would soar to almost $5,000. That's 42% more than what it costs now. A market expert thinks that gold will move up by $200 in the next month, but then it will fall down again. Simon Hunt thinks that prices will hit about $2,800 by early 2026, which he calls a huge purchase. He goes on to say that if the US dollar index falls even further, it might cause gold prices to rise significantly from where they are now. We are getting closer to the storm's eye. The Fed will have to lower the yields on long-term bonds. By the middle of 2026, US 10-year treasuries will probably be closer to 3%. This is a break. Simon Hunt says that a huge rise in inflation is coming, just like it did in the 1970s. We'll see yields in the double digits that will cause a global financial catastrophe, with asset prices dropping because borrowing costs are going through the roof. Traders are making it plain where the lines are. Some others think that significant cuts could happen until early 2026, with S&P targets going up to 7,000. Some others say that high inflation could make it harder for the Fed to act quickly. The US dollar has dropped to its lowest closing since July, which makes it more likely that more people will switch to gold, commodities, and credit. There is going to be a big correction in the market. Simon Hunt says that a 15% market correction is likely before the end of the year. This is because the US Treasury is taking $580 billion out of the system. This isn't just a normal withdrawal, it's a warning shot. Before we get into Simon Hunt's keen observations from his most recent conversation with Mario Ineco, be sure to hit the subscribe button and the bell symbol so you never miss a moment when the truth meets the market. The overall world economy is quite weak, and it's in the best interest of the major central bank to lower long-term bond yields so that the Fed can perform its huge refinancing. So based on what our technical expert says, we could see 10-year treasuries go up a little bit from here in the very short term, but by the middle of next year, they will be closer to 3% than 4%. From that point on, we observe an inflationary takeoff, virtually stagflation, with inflation growing faster than growth. We won't be able to see 10-year treasuries at 4 or 5% by 2027 or 2028. Instead, they will probably be over 10%. That also means that long-term bond yields will be in the double digits in the Western world. And the reason for this is that we are going to see a repeat of what happened in the 1970s and early 1980s. In the mid-1970s, inflation rose sharply, then fell. We're in the same process of bottoming out, and it will start to rise again in the second half of next year. So what happens to the global economy and financial system when bond vigilantes want a premium on inflation rates that are in the double digits? So that's going to cause a huge drop in asset prices all across the world, since double-digit rates are ruining the financial system. So that's what we're witnessing in a nutshell. I predict the price of gold will go up by another 200 in the next month or so. I believe that we will have a good correction after that, which could be related to the central banks getting involved in the bond markets and affecting gold as well. I predict that before the end of the year, who then lead to a huge drop, perhaps more in the first 6 months of next year, we may see gold at 2,800. And then it's a huge buy, because we'll see wars or conflicts getting worse and worse and inflation going up. Please don't ask me what the price of gold will be in the future. If our technical expert is right about the US dollar index, the DXY, then in 2027 and 2028 the DXY will be around 50, which is half of what it is now. If that's the case, the price of gold will undoubtedly double. According to the experts I listen to, the Treasury will be taking out roughly $580 billion or billion from the system for its own reasons. The markets need to make a correction now. I don't think so. It's not the huge companies that have been pushing the markets up, it's the retail sector. That's not a good sign though. I think we'll see a nice correction, maybe 15% or more before the end of the year. What disturbs me, going back to what we talked about before, is that if Europe does send troops to Ukraine to help the Ukrainian army, a lot of money will leave Europe. I assume that major funds have probably already started, but as soon as the first shot is fired, Europe will put in place capital controls. What will happen around the world if Europe puts capital controls in place, since banks are all connected? So I can say that if this is the truth, and if it looks like Israel is getting ready to strike Iran again, then Iran is getting ready for more than simply defense. The world is not only changing, it is also being torn apart. The US-led order is falling apart, and Russia, China, and India are taking over with a multipolar structure. Russia wants long-term safety in Ukraine, and Xi's comments about Taiwan make it plain what he wants. We may talk on our terms or fight. Simon Hunt says that members of BRICS and the ESCO are tired with US diplomacy. Iran even thinks that talking to Washington is a waste of time. This shows that trust is breaking away all throughout the world, and the threat of a massive escalation is now a very real fear. At the last Shanghai Cooperation Organization ESCO summit, Modi, Xi, and Putin, leaders with very different ideas, suddenly shared the platform and spoke the language of partnership. The dollar is still the best currency, but other currencies are coming into the market. And funny enough, the person who gave them the push might be Donald Trump himself. The UK is on a collision course with civil unrest, even though US support might help in the short term. Also, Simon Hunt says that the market will make big adjustments in the next 6 months. But if Europe gets more involved in Ukraine, that time scale could move up and the catastrophe could happen in 2026. Let's go back to the interview. It's the anniversary of the start of World War I or World War II, and that was around 86 years ago, which is roughly the same amount of time as the Seculum, which is normally 80 to 100 years. So we should expect a large fire soon. What do you believe the chances are of a big war? I don't want to see a big war, but it seems like the EU, Germany, France, and the UK have no plans to talk to Russia about peace. If anything, they keep making Russia angry. I heard that Merz said that President Putin was one of the worst ever, famous dictators and killers throughout history. I guess the Russians didn't like that. Not really. Let's look at the big picture here. We are currently in a fight between the one-sided world led by the US and the multi-sided world led by Russia, China, and now India. The strong message I got from the SOE, the bilateral meetings in Beijing, the military parade is that ESCO members, many of whom are also BRICS members, don't often decide it's time to act, and they will stand firm against anything Washington tries to do. For example, Putin won't give up anything he wants from Ukraine, and I think that the most important thing for Moscow is probably their long-term security. That means they need to be in charge of all of Ukraine in one way or another, because America will probably develop hypersonic technology or anything similar in a short amount of time. So establishing a line at the Dnieper River won't give them enough warning on their radar of any missiles that might be coming. So I think they will be able to take over Kiev, take control of Odessa, and then they will say, now we are ready to talk, these are our terms. You can either accept them or not. That message was very, very clear when you read what President Xi addressed to his troops before the military parade. I'll send you a note with the quotes I used this morning. It was unusual to read between the lines, but it was either accept what we want, or else it's conflict. I'll provide you the real quotes since I read them as saying, let's talk to each other, with regard for each other, or else. I think that one of the things that this and prior meetings have shown is that the large countries, ESCO and BRICS, are really tired of Washington's diplomacy. It doesn't help them at all. And I think it was Iran's foreign minister who declared, we have given up on negotiating with Washington. It doesn't help us. If that's what the leaders in Russia think, the same will be true in Iran. It will be the same in China, India, and Russia. I live in Dubai and look at the UK from the outside. I think that somehow in the near term, perhaps with the help of America and huge American banks, things will get better. Stock markets will become better, but the country will be heading into civil conflict. So during the next 6 months, we could see huge changes in the stock market and a very weak bond market. But the main crash gets pushed back to the 27th and 28th, unless, and I keep saying this, Europe actually goes into Ukraine. Then all bets are off, and what will happen, should happen in 27-28, but will happen in 26-27. That's what I think. Yes, it looks like you think something bad will happen, like a fight, and that it will happen next year or in 2 to 3 years. The market is divided. Bonds protect against losses, stocks protect against gains, and gold has become the symbol of distrust. In the next several days, we'll find out if this difference leads to a soft landing rally or breaks down into stagflation anxiety. The Fed's increased chances of lowering rates more than predicted are still affecting the prices of assets and the US dollar index. The US dollar index, on the other hand, dropped more than 10% this year to 97.36. Will investors act quickly to safeguard themselves with actual assets, or will they wait until it's too late? Put your opinions in the comments below. If you liked this video, please support our channel and switch on notifications so you can see our new videos as soon as they come out. In the next video, I'll see you.